Good morning, everyone. Thank you for joining us this morning. We are here and excited to present to you. And as everyone comes on, we're going to give another 2 or 3 minutes to get a few more people online with us, and then we'll start the program. Thank you very much. Just going to give it a couple seconds longer, everyone. I'm watching the clock. At about 10:03, we'll get started. We thank you for your patience. And again, thanks for joining us this morning. All right, here we go. Thank you for joining us. Welcome to our NASB Talks Portfolio Loans and Mortgage Programs webinar. We want to thank you for trusting your dreams to us. My name is Natalie Rowe, and I am the AVP Community Development Manager for North American Savings Bank. I have been an ambassador for the bank in this targeted focus for the last 9 years. I'd like to begin today's presentation by sharing with you a few housekeeping tips. Today's webinar is being recorded. We invite your comments and your questions. Please reference the Q&A chat box on your screen, should be at the bottom. If a question comes to mind for our speakers at any point during the presentation, please just type your question in the chat and we will hold it for the question and answer session at the end of the presentation. You will be receiving a follow-up email that includes a recording of the webinar today. We welcome you to revisit the content at your convenience and share it with your colleagues. Also, in the follow-up email, you will find a survey, and we would greatly appreciate any feedback you would like to share with us. North American Savings Bank is a community bank in business for 95 years with a primary focus on mortgage loans, commercial and construction lending, and depository accounts. NASB is an award-winning residential real estate lender acknowledged by NerdWallet for the last 2 years in the categories of Best Mortgage Lender, First-Time Home Buyers, and Best Mortgage Lender VA Loans. We're very excited about that. Other recognition has been received for our custom loan and traditional loan options. Today, my colleagues will share updates regarding our following NASB offerings. Joining us for the presentation today will be Matt Allen, NASB VP Portfolio Lending, and Richard Colbert, NASB CRA Loan Officer. At this time, I would like to hand it over to Matt.
Thank you, Natalie. So the next loan product we offer for portfolio lending is called a bank statement loan. And right now, this is our #1 product that's involved with portfolio lending, and it's focused on self-employed borrowers. So think about all your potential customers that are self-employed. And roughly a third of all Americans are self-employed. So there's a large population out there, and sometimes they have issues or challenges qualifying for the loan because of that aspect, where they may be self-employed for less than 2 years, or they've recently switched over from a W-2 job and created their own company in the same industry, but they won't qualify. So the true benefit of this type of loan is, instead of using tax returns, NASB will use the bank statements for that borrower. So the last 12 months bank statements is what would be used to qualify for a loan, instead of your typical W-2s, 1099s, and tax returns. So, if you have a borrower that maybe they write off a lot of their expenses on their tax returns, doesn't show a lot of income, but they still receive a lot of income deposited so they can verify with their bank statements, that would be a good candidate for this type of loan. Somebody that recently switched jobs, like I mentioned, started their own company, or many different instances where self-employed, you do run into challenges where if you can't verify 2 years employment, sometimes that's an issue. So if it's between 1 or 2 years self-employed, we'll still entertain that transaction. So we still have to confirm that or validate the borrower has enough income to make the loan repayment. But again, just going at it a different type of format. We'll go up to 90% loan to value with mortgage insurance. So best case scenario, borrower would need to bring in at least 10% down. We lend in all 50 states. I know your focus is here in the Kansas City marketplace, but if you have some clients that are moving out of the Kansas City marketplace, looking for second homes or relocating, we can help them too. So we do escrow for taxes and insurance, as mentioned in the slide. And again, this type of loan product has become very, very popular. We see a lot of real estate agents using it because technically self-employed in some cases, and they can't qualify your traditional conventional method. So again, keep that in mind. And then next slide, please, Joel. So the third product is a little bit unique, and this is probably the one you know least about, and it's called a DSCR loan, or debt service coverage ratio loan. And this is focused on investment property only, so it has to be non-owner occupied. Now, you may not have a lot of investors looking for properties, but there probably is a small batch that investors that maybe buy 1, 2, 3, 4, they keep buying investment properties and they may be tapped out with the max allowed for a conforming loan, which is 10. So they're looking for different ways to continue to purchase investment property. And this type of loan, what's so unique about it is you don't have to qualify based on personal income. So you're not providing your tax returns, your W-2s, your 1099. It's truly based on the cash flow of that property that you're acquiring. So just keep that in mind. Let me repeat that, is you don't have to document any personal income for this type of loan. We're going to get rent comps with the appraisal. So we'll order a typical 1007 to validate the value of the home. And then we'll have what's a 1007, and then the appraiser is going to provide us 3 rent comps, which would confirm what the going market rent is. So this is a great loan product. Say you have investors, they can't verify a lot of income because they write off a lot in their tax returns, or like I've mentioned, they've maxed out their conforming loan allowance that they can have, or they're just looking for easier ways to qualify. They don't have to provide all that documentation that sometimes can slow down the loan process. They know if the property has positive cash flow and it's in the appraisal, validates the value, and it's in rentable, livable condition, then most likely this type of transaction would go through. Because it is a different type of qualification, we require 20% down. Typically, the higher the loan amount, the less cash flow it's going to have. So the more money that somebody puts down, the better cash flow and the better chance that they would qualify for this type of transaction. So think about all your investors. Some of them are looking for creative ways to buy more investment property, and this is a real simple way to do so. And that's the end of my 3 slides, the products. So right now I'd like to pass it over to Richard Colbert.
Hello, everyone. My name is Richard Colbert. I am a mortgage loan officer, and I've been with North American for 33 years now. I'd like to take you through a few of our home buying programs that have been very successful. We've been utilizing quite a bit lately. First one being that Home Buying Advantage program, and I highly recommend everybody to take advantage of this. What this is, it's one step better than your traditional loan commitment. I'm sorry, your loan approval. So, you know, you go through the process and you get your buyers with pre-approvals, and those are great, of course, because you all don't want to waste time. You're not going to work with a buyer normally unless you have that pre-approval. But this one goes one step further. This one, we actually have all the documents, paycheck stubs, bank statements, W-2s, and credit, and it's reviewed by an actual underwriter. So at this point, we can actually issue a loan commitment that would help you normally on your contracts when you're trying your best, especially in this competitive market. You're trying to do anything you can to get your foot in the door and get that contract accepted. That's the name of the game these days, is getting the contract accepted. This may give you a one-up on your traditional borrower that might only have that pre-approval. You can let your prospective sellers know that our buyer is not only pre-approved, they actually have the loan commitment, which means we're down to just getting the appraisal, doing some title work, make sure they have any prior conditions into the underwriter, and we can get you closed a lot quicker. So that is the benefit of the one program, and I think that one should be utilized more and more in this current market. Okay, our RateSecure program is good, very good, and very popular during this time of rate fluctuating. As you, if you watch the market, you'll see the rates are getting away from us a little bit here. But what we can do, if you have a buyer that's pre-approved or pre-qualified, actually we want to go into the loan commitment, kind of stressing that point. Let's say that we get them there and they want to lock a rate. They haven't found a property, but they want to lock a rate. We can lock that rate for up to 90 days, and that gives the borrower extended time to find a property and to know that they have a limit or a cap on the rate that they will get while they shop during that 90-day period. Next slide, please. Now, the Home Bill Rate Protection Program, the RPM program, is kind of an extension of that 90-day program. It's a little bit different because you want to have a property, number one. Number two, it gives you extended period to actually lock in that interest rate. If you're building a house and it's going to take you 9 months or better, and actually that says 9 months, but we can actually work it up to 12 months if need be. That gives you a peace of mind that you know that you're going to get a certain rate with a cap to it. So you're going to, if it takes you a year to build and the rates are continuing to go up, you'll know exactly what your worst case scenario would be as long as you close within that 9-month or 12-month period. There is a 1% fee on that program that's totally credited back to you at closing as long as we close on the property. You know, if some things happen, we understand, but if you just pull out and you've given us a 1%, we've made that commitment on that money, then that's the only time that 1% would not be refunded or credited back towards your closing costs. So that's a popular program right now as well, because again, with the rates doing what they're doing, it takes the guesswork out. And actually what it could do, if you did not do that and your rate keeps going up, it could make you not qualify for the program. Your debt to income ratios were tight and the rates go 2% more than you started at your build job or at the beginning of the process, that might price you out of the house. So that rate, again, that home build rate protection programs gives you a peace of mind while you're doing building. And believe me, if you built before, you know there's a lot of stress involved with building. This helps eliminate at least that part of it. And that is all I have as my 4 slides.
Great. Thank you so much. Matt and Richard, for sharing this valuable information with everyone this morning. This brings us to our question and answer section of the presentation. I'm going to take a peek at the chat here to see if we have any questions coming in. And we do. The first question is for Matt. Is the interest rate higher for a bank statement loan generally?
Yep, good question. Because it is a bank statement qualification, rates are typically higher, very competitive based on conventional rates. So you're going to pay a little bit of an increase, let's say 3/8 to 0.5% higher in most instances. You know, with the fluctuation in the interest rates right now, I know we have not moved those up as rapidly as some of the conventional rates have. Still very competitive, you know, on a nationwide scale compared to other BSL bank statement loan lenders. We offer the best options out there. So again, if you're interested in that product, reach out to us and we can discuss further.
Wonderful. Thank you, Matt. To that point, are there many other bank statement loan lenders that you're aware of?
It's becoming more relevant just with the amount of volume decreasing due to the refinances basically going away in the last 6 months due to the rate increase. So more lenders are looking at this option just to increase their volume, but you know, there's definitely a handful out there or more that offer it, and we feel like we have a head start since we've offered this product for 3+ years and our portfolio lending for 25+ years. So we understand what it takes to get it done, and we're, you know, excited to work with new clients.
Excellent. I want to reiterate, we have also been in business for 95 years. And so we've got a mortgage center that is located here on site in our area, right here, where people can walk in and talk and visit and see any of us at any time. And a lot of experienced people. Richard mentioned he has 33 years in the business. Matt, how long have you been in the business?
19 years.
19 years in the business. I too have been in the business for 20+ years, just here at NASB for 9 years. So keep us in mind. We are front runners in what we do. I have another question that's coming through a text on my phone. Question is the rate higher on the debt service loan product?
So the rates are going to be very comparable to the bank statement loan product. You know, there's going to be that 3/8 to 0.5% typically higher. So yes, due to the fact that it's not a conventional loan, whether it's a full doc loan, there's always a premium for that a borrower pays, but again, still very competitive and gets you an investment property without having to document your personal income.
Great, thank you for sharing that. I have another question for Richard. If I lock in a rate with a RateSecure and the rates go down, is there an additional fee to get the lower rate?
No, there's not an additional fee. In fact, you have that as an option. If you get within the 60 days to 15 days out from closing, you can renegotiate to drop that rate. That's a good question. That was the same for the RPM program. It has a couple of adjustments as well. You can float that fee down. You have a window to relock as well, 16 to 15 days from 60 days to 15 days out from closing. If the rates take a nice little dip and you want to lock in the lower rate, you can definitely lock in the rate, and we'll honor that interest rate. They also have a reset on the RPM program, whereas, you know, let's say that you started at one point in time, in 6 months things are a lot better, but you still want to have that extra security that, you know, you don't want to say, okay, I'm from 60 to 15 days, because you're not. You still need additional time, but the market's better, so I want to reset that whole RPM scenario. You can do that as well. Now, there's a small fee to do that, but it could well be worth it. It's just a one-time fee, and it gives you the better interest rate for the duration until you get to the 60-day to 15-day days from closing. Hope that kind of makes sense. That can kind of get a little cloudy, so it's best, and I'm glad we have our numbers here that call us and ask us a little bit more in detail, because we could I could talk quite a bit on the program itself and the specifics, but it kind of can get a little bit cumbersome unless you really, sitting down one-on-one and looking at certain scenarios to get a better understanding of how the program works.
Very, very true. We try to remind our clients when we're visiting with you that everyone is different, excuse me, and each person's financial picture is like a fingerprint. And so we do encourage you to call us and spend time, no charge. We have time to take and be patient and hear your specific questions to your scenario, build that relationship and see how we can help. I do have one more question in the chat. And that question is, what is the cost to sign up for Home Buying Advantage?
I can answer that one. And you like the answer. It's a whopping zero. It's it's free for the Rate Advantage program. You're not committing yourself for spending any money on that particular program, which is different than the RPM, of course, with the 1% upfront fee.
Wonderful. Another question just rolled in, and this one too for you, Richard. How do I apply for the Good Neighbor program?
Just give us a call and we will be happy to take care of you. We'll do a loan application and get that going, and then we'll check the property and see if it fits, or check your income and see if it fits. But the first step is to do not only the pre-approval, but the loan commitment.
And this is very exciting because additionally, I'm receiving questions from my phone on text. So Richard, I have another question for you. Please provide what a typical time frame might be on the loan commitment for the Homebuyer Advantage once the borrower has provided NASB with all the required documentation.
That is an excellent question.
Yeah.
Typically our pre-approvals, they only take, we can do that in one setting. That commitment's probably going to take you a few more days. We can get it turned around, and I'm going to say under a week, but normally it's just a matter of days.
Great. And we want to stress to have that commitment is like having cash when you walk into the door with your realtor to present your offer. That's like having cash on the table. So just a few more steps might be outlined in the commitment for you to wrap everything up at the end, but it's a great thing to explore because it takes you down the line way deeper than getting pre-approved. So
absolutely.
Thank you. Thank you both. Thank you. I don't see any additional questions at this time in the chat. Matt, Richard, is there anything else you might want to share with our attendees today as we begin to wrap up? Anything come to mind? Anything you just want to say as a personal message? And I'm putting you on the spot because we didn't talk about it, but I want to give you that time.
Yeah, I would just add, if you're in question about whether your borrower qualifies for a certain type of loan program, have them reach out to one of our loan officers, reach out to Richard, myself. We can go through the scenario. We highlighted 3 different loan products, but we really have more than that. Those are the 3 that tend to be more popular, but we have other ways to get creative with qualification for a loan. So just know that if there's an option out there that NASB has entertained it or thought of it, and we've designed a program around it that makes sense for us. So we'll do everything we can to help your borrowers out.
I have to concur with that. There's only so much that you can do here in a quick presentation. So if we get your information in front of us, take a look at your specific picture, we would definitely fit you with the best program we have here at North American Savings Bank.
And we are dedicated to making relationships and being committed to our customers and walking the walk with you throughout the process. And we get just as excited as you do to see the good things happen at the end of the day. So at this point, I want to thank you again for trusting your dreams to us. We would like to express our sincere thank you to our community partners for taking this time out of your busy schedules to join us today. We hope you're having a great week. Please direct any additional questions to us by contacting us through the information that was seen in the presentation, and we look forward to hearing from you. You will get some follow-up emails with a survey and some other information from us after. Thank you. Have a great day.